Good afternoon, everybody, and welcome to Tech Talk here at MarketStream.live. My name is Joseph Cusick with the Cusick Group, securities offered by MoneyBlock. Let's take a look at the general markets today. We'll just give you some context because we've had some decent moves over the last couple sessions. So I want to give a base so that you guys can get some transparency into what we should expect going forward. Starting with the Dow Jones, Dow is trading at 20,701. Again, you can see that it is in this range right now. With this consolidation, it had to test that 50-day moving average yesterday, bounced off, is now testing a 20-day moving average. But you have this consolidating, choppy market, but in this range. So we're going to use the 20 and 50-day moving average as almost our channel barriers at this juncture. With that being said, the options right now in the SPX are pricing out basically about, for the remainder of this week, a $12.88 move. That's about a 0.6% move being priced in, either up or down. I mean, you could see it as high as maybe 20,713. Excuse me, I'm looking at I was thinking the SPX. Taking a look at the Dow, you're looking at a 130-point range. So basically, you're looking at as high as 20,800 or as low as 20,600. As a matter of fact, if you go and take a look at the SPX and the S&Ps, again, you see a similar range bound between the 50 and 20-day moving average. I'm just using that as my barriers or support and resistance levels based on the last 20 days of trading and the last 50 days of trading. That's these moving averages. Just gives me an idea of short-term and intermediate-term sentiment. Now, with that being said, you see that it is actually challenged and settled right on its 20-day moving average of 2,356. Now, if we take a look at the SPX options, if you go to the end of the week, these are the weekly options that are they're going to expire at the end of the week. With the underlying at 23.59, I just look at the at-the-money straddle and strangle markets, right? So here's the straddle, first strike at the money, first strike out of the money. That's the strangle. You add all these up, right? Okay, so you have 5, 7, so let's say 14 or 13. 13 and some change, really almost 14. And then you have 15, and let's say right now, so basically you have 28, divide that by 2. So you're roughly looking at right around between, exactly, if it was, let's say 26, you're looking at a 13-point range. In the S&Ps, and right now that's right about where they're pricing it out. Okay, so the point being is that that's the range that we're looking around. In the S&Ps, that's about 0.6%. In the Dow Jones Industrial, you're seeing a 6-10% for the remainder of this week range. For the Nasdaq, you're seeing basically a 32-point range, or in other words, a 0.6% range in the Nasdaq. One thing about the Nasdaq that's notable is it's above its 20-day moving average. The bulls have taken control in tech. The Russell 2000 has not yet taken either the 20 or 50-day, but is challenging both. They both converged on each other. This is a turning point, which basically makes sense, right? We have domestic policy here in the United States that's being debated. We had healthcare that's basically been sidelined. We have tax reform that's now being talked about. We're going to have earnings that are going to come up, and that's going to put some potential catalyst to either the upside or the downside, bulls or bears. Right now, the Russell 2000 is pricing in roughly a 1.2% range for the remainder of this week, or in other words, a 14-point range in the Russell. So that means you could see it as high as, let's say, 1380, or as low as right around 1353. So you have quite a decent range here. As a matter of fact, if you look at it visually, you're seeing right here the lows of today, and looking for getting around the highs of last Friday, which was the 21st. So again, you're seeing a pretty decent range of about 1.2%, and then finally volatility. Now volatility has fallen off very dramatically, down 1 point at basically, let's see, we got it coming in at 1150. So with that being said, you look at the VIX options are pricing in basically about a 3% range right now. It was down 7% today. So this thing can move. Now, 35 cents is basically what they're pricing in for the remainder of this week. But with volatility, it's pretty difficult to price out how this thing is going to move because those estimates can be blown away with one headline. So with volatility, know this. We've had a pretty decent range. We've had a high of 15 and right now a low of 11 and some change. So you have basically a 4-point range in volatility, which is very inexpensive right now. So there's a real still sense of complacency in the market without really having a lot of the catalysts being delivered on yet that the market is anticipating. So we're going to watch this all very closely, but now you have some context with what's been going on with looking at the chart analysis, what's being priced in, looking at the option analysis, and then bottom line is, you listen to us. We'll give you some ranges here at Tech Talk on MarketStream.live. I'm going to be back in about a half hour, and we'll be talking at 4:30 Eastern Time. We're going to wrap up all of today's action in the markets. We'll see you then.